Good morning. It's Wednesday, August 21st, about 6 a.m. Central Time. All right, the precious metals are mixed after yesterday's rise and fall type session. You have December gold down $4 at 25.46. Low on the overnight session, 25.42. So it's kind of at that lower boundary, the upper boundary, 25.58. So September silver up 7 cents at 29.59. And then December copper up 3 cents at 4.23. So copper already rolled over on many of the trading platforms from September over to December. If you look at September silver, you've got till August 30th where that first notice date is. If you look at the open interest, it is much larger on that December contract at 84,000 contracts versus 51,000 on the September. A lot of the volume, though, is still on September, so you're going to want to work your way out of September and into December. The way you could do that, one suggestion, look at the average true range, look at where we're at on the day. So silver prices right now, we are up 7 cents, and the average true range has been about 90 cents. So what someone could do is they could look at the September contract, put a sell in about 30, 40 cents higher, and they could put on the December contract a buy in 30, 40 cents lower, and see if we get some volatility in the market to give yourself a potential favorable roll. So looking at some things coming out here today, we got a couple things here. Crude oil inventories expecting a drawdown, 2 million barrels. Last week was a surprise build, put a little bit of pressure on that market. Then also the ceasefire agreement in the Middle East here that's being discussed had really sold that market off. So one of the contracts we're looking at is the December crude oil contract, back trading for a rebound to the upside. We'll need some renewed tensions over in the Middle East, and then also a bit of Chinese pickup here as far as their demand structure. Now looking at other things coming out here today, we do have new employment estimates are out Wednesday and are expected to show weaker than initially reported job growth, and it could reignite the discussion for that 50 basis point interest rate cut. So the Bureau of Labor and Statistics, they're going to release their preliminary benchmark revisions to net payroll growth for the 12-month ending at March 2024, and that comes out at 9 a.m. Central Time. A lot of people are talking about this. This is kind of like there's some whisper numbers that are out there and everything else. Basically what they're saying is that the government has been lying about the job growth, and we've been kind of thinking that as well. So if you look at some of these payroll numbers that have come out, they've just been blowing away the expectations, and it doesn't line up with initial claims numbers, it doesn't line up with ADP, and it doesn't line up with the rising unemployment rate. So the expectations are they're going to cut that growth on the jobs figures by 500,000, but there's a lot of discussion what happens if it's a million. This would be the largest downward revision since 2019. So that sharp downward revision is going to basically say that, hey, this labor market is deteriorating too quickly, and the potential for that larger interest rate cut will be discussed. And then a few hours later, we're going to have those FOMC minutes that will be released from that July meeting, and we kind of look and pick and pull apart as far as was there any discussion for that first interest rate cut here, how close were they to actually doing it, and then what does it lay the groundwork for going forward. So looking at the CME's Fed Watch tool, about a 70% chance that the Fed cuts 25 basis points, 30% chance that the Fed cuts 50 basis points. So a little bit of an upward tick there. Now getting into the markets here, so gold futures kind of hovering out. They've gotten kind of far away from the moving averages, the 50-day moving average, the 200 and things like that. I am looking for some kind of correction. Maybe if you do get that number a little bit lower than anticipated, somewhere closer to in line with expectations, say 500,000, you might get a bit of a pullback on that gold market. Now looking at the copper market, continuing to grind at the 200-day moving average, looking like 430 would pop it back to a neutral trend, but we're going to have to see what happens here. They did revise that mine strike, and we also don't have any improvement over in China. Now looking at silver, again, silver was unable to break out to the upside. It did yesterday at one point, but it gave back most of those gains and only ended up moderately up just a few pennies here on the day. So looking at that gain, about 21 cents yesterday. on the market, but it's got to get over about 29.90 in order to trigger back to that neutral trend, and we really want to see that close over $30, and that's the September basis contract. I'll probably stop quoting September in the next day or two. The big mover and shaker overnight is the platinum market, up about 2%, 973. That puts it up about $20 on that overnight session. So a couple other markets we're looking at. Obviously, we're watching the crop tour, seeing if there's any kind of developments here or strain on that crop. See if we could form a bottom on some of these markets like corn, soybeans, and wheat. You did have a big breakout to the upside in the oat market, and then also keeping an eye on crude oil. And then remember, when I talked about position sizing yesterday, many people, they avoid natural gas because of the fact that larger contract, every dollar move being $10,000. They did come out with a smaller one, which is about $2,500 for every dollar move. And then finally, they came out with one that is $1,000 for every dollar move. So you could really position size that one right and start to manage the risk involved in the average true range, given where your account size is and the volatility that you like to see in your type of trading account. So you got any questions, reach out. 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.